Hey guys, it's Chris Wong. For this video, I'd like to talk about using margin for investing. So as a disclaimer, I'm not a financial advisor. I'm just a guy who's interested in building a portfolio. So for years, I follow a strict principle not to use debt to get ahead, or not to use debt to try to buy things I could not afford. There may be a few exceptions. I might have a little bit of debt, but it would just be like a regular credit card transaction or purchasing a car because I was waiting for a check to clear first before I can actually pay off the rest of the balance. But other than that, I never had the intention to use debt to buy a car or to make a purchase and then try to pay it off in 3 or 5 years. And when I got into investing, I never had the intention to use margin in order to try to get ahead, because I felt comfortable to just use my own money in order to build wealth. So for months, I watched YouTube videos from Unconventional Wealth Ideas and We the Climbers, and they use margin to get ahead, and they use margin for investing in Defiance and YieldMax funds. I actually thought about it for months and decided to actually give it a try, as long as I understood margin. So nothing in this video is financial advice, and it is something I'm doing for myself. So I actually decided to give margin a try, and I created many strict principles for myself in order to use margin properly. So the first principle I had was I have to have a full-time job and continue working full-time, just to protect me, just to live my day and to pay off my expenses, because I'm nowhere close to retiring off portfolio. The second principle I have is I could not have any other forms of debt. So that means no mortgage, no car payments, no credit card debt being behind. They all have to be paid off. The third principle I had is I had to have a good portfolio set up with Wealthsimple. So Wealthsimple is my main account I use for investing. It's also the account I use for my Wealthsimple cash in order to make purchases. The fourth principle I had is have consistent investing experience for at least 2 or 3 years. And it's not just opening up your account every 2 weeks whenever I got paid and then just invest within like 10 minutes. It was actually reviewing different funds, trying out different things, looking at investments, calculating dividend yields. That was my regular thing I did for the last 2 or 3 years. The fifth principle I had was I had to actually have an okay portfolio on my secondary account, the account I was going to use margin with in order to back me up. So when I actually decided to use margin, I was actually spending time in order to figure out which brokerage I want to use for margin. And for me personally, I'm using Questrade for margin. And even though Questrade right now on the USD's website, their website says I think around 13% interest rate for USD. So 13% seems quite high, but if I'm deciding to try to use margin, I'm using funds that actually pay a lot more than that in order to cover the margin interest and to actually reduce the negative cash balance. The next principle I set for myself was anything I pick for margin had to be 30% maintenance or less. So if the fund happens to be 50% listed on Questrade, then I do not invest on margin with it. So for example, I use YMAX, I use Coney, and so far I use QQQY and IWMY because they all have 30% margin requirement on Questrade. They could have a different margin requirement on other brokerages, but I'm fine with using Questrade. So as long as I get the 30% margin requirement, I feel safer investing in those. And the last principle I set for myself was, as I'm getting to learn margin, I cannot use more than half of my current portfolio that's on collateral. So right now on Questrade, they have a function called margin power. So margin power allows you to use extra buying power related to your TFSA. So when I actually invest on margin, I'm not using more than half of my TFSA. And the reason why I do that is because I want to protect myself from margin calls, and I want to learn to make sure I'm okay. I want to make sure I have plenty of buying power and save some buying power in the event that there's a drop in share price of any stocks that I'm looking for. Or if there's like a stock market crash, then that's an opportunity for me to take on a bit more risk and use a bit more margin. So right now, I set my limit to 50% of my TFSA is the approximate margin I could use. And if I ever decide to use more, the maximum I'm willing to use in the future is up to the amount of my TFSA. There's no intention for me to use more margin than my TFSA in order to try to get ahead. My intention for investing this way is not to buy low and sell high without any collecting dividends. Everything I buy had to fit a strict requirement. So 30% margin requirement, they have to pay me a high dividend per month, and the dividend has to exceed the interest rate. So even when I invest on margin, I'm actually more careful than investing without margin. And I also do very careful calculations on making sure that I would still get a positive dividend and that the cash flow at the end of each month actually reduces the negative cash balance, because I also have to factor in withholding tax because I'm a Canadian resident. So overall, investing on margin is something I'm trying out for myself. It's not something everyone should be doing. It's not financial advice. I'm not giving a recommendation to use margin, but I'm just telling you guys that I'm using margin now, and it's not my primary account. And overall, I set strict principles for myself to make sure that I use margin safely and see if my portfolio is going to grow using monthly dividends to cash flow the investment. Trying to buy low and sell high is not something I'm good at. So I'd rather have dividends to cash flow my investments every single month, every single week, if possible. And I have no intention to actually withdraw cash out of the account in order to pay for expenses. The whole point of the cash flow coming in is to pay off the negative cash balance. And once I feel like it's time not to use margin, then I can actually withdraw cash if I want to. The other thing I have to consider too is the withholding tax, because I'm Canadian and living in Canada. So every dividend I get outside the RSP, there's a 15% withholding tax. So I have to take that into consideration when doing the calculation of how much dividends to get, the withholding tax, and to deduct the monthly interest rate from the margin. I hope this information is helpful. If you liked the video, please give me a thumbs up. Otherwise, please subscribe to my channel for future videos. Thank you guys for watching.